All right, all right, all right. Good afternoon, everybody. Everybody is funking out. Everybody loving the track. Funky Market, our own proprietary little tune. Hope you guys like it. Welcome to the FOMC trading. Let me make sure I get all the YouTube feeds. Yes, Fred, I do think there's a sell-off disappointment here. So we're going to start first and foremost by talking about my friends at Apex, because a lot of times during these high impact news events, we love to take two accounts because they're dirt cheap right now. You can buy them for literally $30. Just simply go to over here to my friends at Apex. Let me show you how to do this. Go to Apex. And buy one account, buy another account, go long in one account, go short in the other account. And if there's a big enough move, you get instantly funded, right? So I'm going to go into my own account. However, this time, today, I don't think you guys are welcome to play it, but I am not, because I don't think there's going to be much of a surprise. Let me just get into my account. I'm going to show you how to do this. 444440. Okay. Let's see if I can authenticate myself in there. All right. So all you need to do to buy an Apex account is either choose Wealth Charts, which is a little cheaper, and I recommend the 50K. That's the sort of sweet account, or you can go to Tradeovate, either one. But if you buy Wealth Charts, it's like a couple of bucks cheaper. But just how cheap is it? It's really, really cheap. If you use the code BKSAVE and you hit where am I thing? And you hit the button here, it reduces by 80%. So, so it goes from like $1.67 to just $33, and it's very, very efficient. You buy two accounts. If there's a big move, boom, one account gets funded in a single trade. And because Apex is so cool on the evaluation side, they're completely not stuck up about how you want to get yourself funded. You want to do that, be their guest. It's totally viable. Having said this, though, I don't think we're going to get a lot of surprise. I think we are essentially going to get the 25 basis points. Hello, I'm talking. Everybody calm down. The whole dog squad here is ready on alert. So my view is, yeah, it's worth a punt, but I'm not doing it. I did it with you guys already twice. We did it at CPI, we did it at NFP. It was really cool. It's wonderful. The proper way to do this, if you want to do this is my suggestion. I think actually, frankly, the volatility move could be in gold, right? In gold rather than in NASDAQ. But I'm going to give you the NASDAQ rundown. And you can do it, we got about, 2 minutes on this thing. With NASDAQ, you want to use 4. Don't use more than 4 NQs. And the target is, what do we use the target? It was, you need 3,000. I always forget this. 3,000 divided by 20. That's 150 points divided by 4. Sorry, divided by 4. That's 37.5 points. And you want to times 4 ticks, 150. That's right. It's 152 ticks. That's what you want to set as your stop, as your target. Don't set a stop, because you don't want to be in a stop formation. It's do or die. You win, you get funded. You lose, you burn the account. So 4 NQs, 152 ticks. That's the reasonable vol structure for this. And for gold, again, I would go with 4. And this is each it's 100, so it's 30 ticks. You only need 31 ticks. That's what I would do. It's actually, is that right? No, hold on. 3,000 divided by 4. $7.5. I'm wrong. You need $7.5. So that would be 75 ticks. So for gold, you would do this. You would do 4 GCs with 77 ticks, just to give yourself a little room so that you get funded and pay the commission. Be my guest. Have a fun time. Yes, 50K challenge is like $33 on, well, it's, oops, news out already. Is it? Or did we come out? Wow. Did we just pop? Wow. Let's see. That looked like, wow, that was fast. Let's see. No? Was it pre-news? Are we just, is the market? Yeah, it looks like market. They're just dicking around. Yeah, I didn't think so because we just broke out. Did news come out yet? Interesting. Okay, let's see what's on the calendar. Sometimes the calendar is faster. No, they haven't come out yet. So this is all just pre-dick around news. Now, if you guys had taken the position here, you actually probably would have popped, right? And now we're going down. I mean, gold is really 425 plus 2 more cuts this year. Negative response on gold. Gold doesn't like it. If you guys took that, it worked either way. It actually worked both ways at 7.5. I did not trade today. Oh, Dr. D says another fund account. Dr. D, what'd you trade? Did you trade NASDAQ or did you trade gold? Because NAS did not have much of a reaction here, although maybe it did. That's not true, actually. NAS did pop up. Dr. D is the master of news funded accounts. Tell us a little bit about it. We got about a half hour before the presser comes in, and we can do some trading. How did you fund the account today? On NQ, you did the basic thing. The 4 contracts, straddle, 152 ticks. NASDAQ popped. If you got in here, 52 to 500 is $50, 50 points. You know, more than enough to get funded. So yeah, I mean, it worked. I don't trade. We're not trading euro, Kevin. We're not trading any currency. So no point in asking me about currencies. We're trading futures only. So gold worked and NASDAQ worked if you traded volatility. So it's kind of interesting. I guess it was sort of the disappointment trade. It was the disappointment trade that that did it. But regardless of how you traded it, it all got done. Although, you know, as I said, there is an event at least once a week that can be traded this way. I've funded pretty much my fill of accounts. I have one account that I'm working right here. Let me see where we got it here. Really, really working hard at nothing more. Here, this one, towards the 53. I'm going to work this account on $10 and $20 trades just to show you that you can do it the hard way. And the reason why I'm trading this in a very, very small fashion is because the function of this funded account, like, so everybody's asking me, oh, does Apex really allow this? And is that possible? The answer is yes, but there's always a catch. And the catch, of course, is that they're more than happy to have you get funded. And it's great. It's really wonderful to have a funded account because then you're actually working with actual capital. But when it comes to real money, they don't allow any of this garbage to happen. They're not going to let you straddle. They're not going to let you do any of these things. You have to follow really good quality trading rules. So there's 2 ways to do this. You could get yourself funded and try to, follow good quality trading rules on the funded account, which frankly is kind of hard. That's why you need 4, 5, 6, 7 funded accounts, because you need to have lots of accounts to experiment and to be able to really get the rhythm correctly. Or you could practice your rhythm on the pre-funding account and actually do it the hard way, but in the end, do it the easy way. Because if you do it the hard way on the pre-funding, you can then roll straight into the funding in the same mindset, the same structure, the same everything else. So today, we're going to do lots of little trades as good traders. And we're going to do all quality trading behaviors, win, lose, or draw, to kind of show you how we're going to drive this account to profit in total and complete control. Gold had, gold is obviously having the most interesting response to all of this. We got about half hour before the presser. The presser is always, right now, everything is going to be kind of in a stall mode. But regardless of how everything is, we're going to set ourselves up for complete and total success today, because I'm going to show you all of the super high probability setups that we can do with our bread and butter indicator, the BFF dots, as we trade the dots all the time. And I'm going to show you how I traded this all morning long for nothing more than like 5-10 points at a time. Boom, 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 boom. Winner, winner, chicken dinner every time. That's what I want to show you. High probability, high setup structures. I'm glad everybody's in the room. You guys are going to get to see hopefully lots of good trades, and they're all going to be driven off setup structures. And more importantly, I'm going to trade like the biggest pussy that ever lived, because that is the way to win. Okay, we're going to focus on the drawdown, not the profit. The profit is going to take care of itself as long as we focus on the downside. It's going to be a very, very unique way of trading today. Instead of just, one large and in charge, we get everything done. We're big swinging dicks. That sounds really, really great in fiction and on YouTube, but doesn't really play in real life. So we're going to try and do a little bit of real life trading today. Hopefully you guys can really enjoy some of the setups and the structures that I'm going to show you. And we're going to focus. I'm actually going to try to. The great thing about it is we're going to try and get as many trades as possible. So I'm going to try and run 4 instruments. We're going to run the Q. We're going to run the gold. We're going to run S&P and maybe a little bit of Dow, because we'll see what comes up. That's the way. Thank you. Hey, Sandy, nice to see you. Dr. D, what are you saying? Killed the second as a trade in NQ and AM. Sorry, I missed your whole thread here. Okay, maybe you can bring us up. Kathy traded this morning. Kathy did a whole show this morning, which I heard went really, really well, right? And in the show, she actually, we can talk a little bit about this now in a minute. I heard the show was really, really well. In the show, she actually offered all of her knowledge and all of her training in a new masterclass that she's teaching. And while we're waiting for Jerome to get on board, because there's going to be no price action, I thought maybe I'm going to take a second. I want to show you some of the stuff that she talked about, because I think it's a really, really cool masterclass. And I'm actually going to, let me see if I can do this. Okay, let's see. Yeah, I'm going to put the link in here, guys, and I'm actually going to pin that link for you. So if you're interested in her masterclass, check it out, because she's doing 10 weeks. She roped me in for one of those 10 weeks, but it's really going to be all her. Very cool stuff. Basically, she's going to be talking about, the various pillars of the market, how she weaves fundamentals and technicals together and sentiment into one very, very thorough analytical structure. Now, guys, you guys know, I don't have to tell you, or maybe some of you guys don't know, she's literally one of the most consistent Forex traders I've ever seen in my life. She has a record that's going back now like 10 years. 10 years of purely documented every single trade trading. And I don't think she's ever had more than 1 or 2 losing months in those 10 years. She's just incredibly consistent. What she does is she trades for about 100 pips a week. And I think her whole goal was to take this course and teach you exactly how you could achieve the same thing, which is 100 pips a week. Just to give you an idea, that's 5,000 pips a year, depending on how you trade it. It's an enormous amount of money. So this is what she's talking about. Economic data that shakes the markets, how they're going to impact gold, timing the trade, and all the correlations and risk stuff that she looks at. Basically, fundamentals and sentiment and action. This is really cool. She really knows which, the trick in all of this is not just figuring out where the trade is, but choosing the right trade pair. And I think week 6, where she's talking about the unique aspects of various trade pairs, is really, really going to be very valuable. And then just sort of, the basic technical foundation. And then she's roping me in for some of the technical strategies and some of the portfolio work, which is scaling your account, choosing what to trade, all of that stuff, position sizing, everything that you can think about. I'm actually, I'm going to make this offer to you guys right now. If you guys, since this is really a Forex driven course that she's doing, right? And almost everybody who's trading Forex is trades it on MT5, MT4. You guys know I have a proprietary trading tool that is the greatest thing that since sliced bread in terms of being able to place trades. It can place trades with a stop and target instantly at one single click. I've shown it to you 1,000 times. Generally, I never release this thing except for my own stuff, like, for anybody who comes into my webinars and it kind of trades my stuff. But if you guys want, I'm actually going to make this deal for you. Everybody she's got about a 48-hour huge discount on the show. So the link is over there. You can take a look at everything, the full agenda. I will throw in this tool for free, and it's both MT4 and MT5. And it is so cool because you can use it for the rest of your life. Like, it has no restrictions on it. And the moment everybody starts using it, they always ask me, can I have it for life? Because you will never trade again without this thing. It's the best risk control tool in the world, since every single click you make has a control for a stop and a target. That means you're never without a stop. You can always adjust it after you make the trade, which is super cool. You can sell half, go to break even at a single click. You can blow out your whole position. You can do everything. In the last week of this masterclass, I will give you a full rundown of like a million different things. It's the Swiss Army knife of trading. I designed it myself. It's not written by anybody else. Is precisely the reason why it's so good is because it's done for traders, by a trader. So I fully wrote the code. It's both MT4, MT5, super cool. So I'm going to throw that in, and I am going to sweeten that deal because I heard she did a great job, and I'm here to lend support. Even though, of course, real traders trade futures, right? But if you want to trade FX, and I know there's a ton of FX people in the room here, and if you actually really want to learn FX and learn fundamentals and everything else, this is like a must-have tool. So my one-click trading tool in the package. And if you already bought it, don't worry. I know who bought it. I will give it to you. I will send it to you in a zip file. We're also going to post it. Once you buy it, you get an access to this whole resources course. I'm going to put it into the resources course so you can download it to your heart's content. No restrictions. Zero. She's going to fucking kill me for this, but no restrictions on this. So go ahead. Go knock yourselves out before Jerome and company start the show on the Fed. If you're really, really interested in trading fundamentals, go get our course, and I will send you my trading tool as well, because I think it's it's the least I can do to make you guys successful. Sheila's going to teach you how to choose trades. I'm going to teach you how to actually trade trades with this tool. All right, are we good? Any questions on any of this? Are we clear? Everybody loving this? All right, cool. Let's go back to the videotape, as we say, right? Remove, add, back to charts. So we got a lot of time. Dr. Chris Cole indicator sucks. I don't know what that means, Eddie. We got a lot of time. So let's review the bread and butter setups that are part of our BFF dots. Who's brand new in the room here? Give me a wave, say hello, say I have no effing clue what you're doing, Boris. So explain to me from scratch. Explain to me from scratch, please. Talk to me. Yeah, dots isn't there. I know, Eddie. That's a wealth charts thing. Okay. As I said, I don't control wealth charts. So I will try to get it to you as soon as I can. But guys, it's going to take a little while to get them organized. They're very, very busy. Okay, so everybody knew you were looking at TradingView. We're looking at my proprietary indicator called BFF dots. Brittany, nice to have you. Keisha, Andrea, nice to have you. Ladies, speak up. All you men. Marguerite, nice to have you. Nice to have you. Okay, Kevin, let's go, gentlemen. I want to see an equal amount of men say that you're new versus ladies, because like the audience is 90% men, but the women are the only ones that speak up. And by the way, trade really well. Hey, is Gloria, are you in the room today? Gloria in the room today? Is your hubby here today too? Okay, so Kay is telling me that it's not a forex-driven course, that I am full of crap, that it's gold, indices, and forex, which is why they should go learn the total edge. It is her total edge system. It really is. I mean, she's absolutely right. Hi, Gloria. Nice to have you. But and I guess my point is, it wasn't so much about the forex. It was the fact that a lot of you guys, I'm sure, at least half the room, I would bet 3/4 of the room right now trades MetaTrader 5, MetaTrader 4, and trading CFDs. And if you're going to be trading, if you're trading forex, that's just implicit. 100% of you are trading MetaTrader 4, MetaTrader 5, right? So if you're doing that, I'm throwing in my trading tool for free, but only in this next 48 hours. She's discounting this absolutely to the lowest price in the next 48 hours. It's just like Apex. You snooze, you lose, right? All the guys who just got funded bought the Apex discounts and got it with cheap money. So get this course with cheap money, and I'll give you my thing. After that, in 48 hours, no, I'm not giving it away anymore. So go out there, please go get her course. It's really, really cool. Really nice. Hey, Crazy FX, nice to meet you. Oh, Gasly FX, nice to see you. Carlos, nice to see you. New traders, nice to see everybody. Nice, nice, nice. All right, we got about what? We got 15 minutes. We got plenty of time. What's everybody want to talk about? Gold or Nasdaq? Give me type in the chat what you want to do. Calocan, nice to see you. Where's everybody coming from? Is Asia in the house? Anybody from Malaysia, Indonesia, Singapore, Japan, Korea? Talk to me. You guys want to talk about gold? Okay. Middle East. Anybody from Dubai? My favorite place. Kay and I going to Dubai. If you guys are going to be at the Dubai, the Forex show, we're going to see you guys in 2 weeks. Very excited. Come say hi to us. We're going to hang out there. India, nice to see you. South Africa. Zimbabwe gold, of course. Zimbabwe gold, nice. And UK, Canada, Singapore, very nice. All right, so we got the world covered. This is actually a great time to trade because literally, you know that we're in New York, right? You know that I'm back in New York. It's siren time. What is that? Is that police, fire, or ambulance? What do you think? Let's see if you can guess the New York City sirens. That was actually the ambulance. The most annoying one is ambulance. Police is like pulsating, get out of the way, and the fire truck is like an elephant. Germany, nice to have you guys. What's AMBO? Oh, ambulance. Yeah, you're right. Yes. Very good. Very good. You guys are all properly getting it. It's not NYPD. That's right. That's right. Everybody want to talk a little bit about gold. All right. So let me set the scene because the scene is really, really cool with this indicator. It's a trend-based indicator, but we're going to trade it counter trend most of the time. I know I'm going to blow your mind. But just stick with me. It's a lot easier than it sounds. So how do we determine trend? 200 period SMA against 8 period SMA. If 8 is below 200, we're negative trend. If 8 is above 200, we're positive trend. So looking at these two charts, gold, NASDAQ, what's gold? Is gold positive trend or negative trend? Give me an answer in chat over here. Is gold positive trend right now, this instant on a 2-minute chart? Is it positive trend or negative trend? Answer the question. Let's see how well you guys can see the charts. Come on, let's go. Positive, negative. I want to see some answers. Nobody has an answer. What did I say? 8 above 200 is positive trend. Gold is positive trend. 8 above 200. NASDAQ, positive trend or negative trend? Positive trend or negative trend? Notice a 2-minute chart. Dos minutos. 2 minutes. We're trading a 2-minute chart, my friend. Okay, 1-minute chart is too insane. All right, NASDAQ is negative, gold is positive. So step number 1, right? Then within the trend is like a wave. The big wave is positive. The big wave is negative. There's the small wave. The small wave is the 8-period SMA, and the 8-period SMA undulates, right? It undulates from being positive to negative. If it's green on the slope, the 8-period SMA is positive. If it's red on the slope, it's negative, right? It's undulating positively, undulating negative. Everything in life is a wave, right? For anybody who's a physics geek, we all know that the quantum function is a wave. Everything in our life is a wave. But if you're a surfer, you also know that everything in life's a wave, right? We all go in cycles. Human emotion is the reason why charts, the way we look at charts the way we do, is because we read them the way psychologists and psychiatrists read crowd behavior. It's just wave behavior. If you understand sociology, psychology, you understand that everything is wave behavior, right? So both kind of hard physics and mathematics and squishy emotions all meet themselves on the chart. And we're just kind of putting mathematical overlay onto effectively what is human behavior, right? So we got positive waves, negative waves, boom, boom, boom. Within that, we have little breakout blocks. We call them Christmas tree trades because we don't have any imagination. And, Christmas trees are green and red. So we kind of like it. So we just decided to do that. Now, occasionally, you're going to see the Christmas tree block go orange. That's a new innovation that tells us a really important piece of data. What that tells us is volatility. What it tells us is, hey, this candle is so fucking big that you better expand your stops and targets because it's outside of the norms of volatility of what you're trading. Just to give you an idea, suppose you're trading with a $1 target, $3 stop, right? But the candle itself is $10. Well, then you would lose money and be right on the trade. Nothing worse than being right on the trade and losing money, meaning that your stop is going to be too small for the possibility of the trade. It's going to stop you out before it goes in your direction. It has too much volatility on the trade. So we incorporated this cool little new tool on the indicator that tells us, this is a big ass candle. You better expand your stops and control your size, lower your size so that you can be able to hold on to the trade. It's like being on a Bronco, being on a really, really big Bronco. You want to hold on to that Bronco, you damn well better loosen up your whatever pants. I could have zero clue at how cowboys ride their Broncos, but anyways, guys, don't ask me any questions about the rules right now. I'm trying to explain the setup. You can find all the rules and everything else on the Apex website. I am not Apex. My job is to help you win in the market and pass the Apex stuff. Everything that's actually related to Apex or wealth charts or anything else should be directed to them, okay? I am here to coach you on this. I want you to get that product because we love that product, but your job is to learn how to trade with me. Stop all the questions about customer support. I'm not going to answer them anymore. I'm just tired of it, okay? Or ask them of anybody else. I am just not customer support for those things because it takes away our time from actually knowing how to win in the market. That's what we're going to focus on today. So no more, I'm just making this rule from now on. No customer support questions ever again on any of this shit, okay? Because they're there for customer support. I'm here to teach you how to trade. Okay, so everybody following me on buys and sells and entries. It's Christmas all year long. I love that, Gloria. That's so cool. I love that. It's Christmas all year long. It's a great point. It is. So generally, the normal sort of normative conventional way of trading this is, hey, you trade the red labels when the trend is negative. You trade the green labels when the trend is positive. But that is the most primitive and sort of the most simplistic way of trading it. You can do that, and most of the time it's going to work. I mean, the labels are designed to give you the absolute best possible entries. But of course, best possible entries doesn't mean always winning entries, right? However, we're going to practice something interesting and unique today. Instead of just looking at let's sell the red ones in a downtrend, let's buy the green ones in an uptrend. we're going to select ourselves to certain specific patterns that work the best. I'm going to disclose a couple of those patterns to you. So, for example, let's imagine, and first of all, the other thing I'm going to say is that both gold and NASDAQ are 70% long trades. What that means is that 2 out of 3 trades that we make should be to the long side. In other words, our only 3 considerations is we're in a positive trend. I want to buy the the breakout, or I want to buy the retrace. We're in negative trend. I want to buy the reversal, and we're in negative trade. Maybe I want to sell the breakdown. Of those 3 choices, 2 of them are buys. Only one of them is a sell. And the reason why we're always looking at it from this framework is because on a big scale, clearly, this is a positive bias instrument. NASDAQ is a positive bias instrument. So is gold. They've been rallying for the last 10,000 years, right? Or at least the last 10 days, or whatever. And so buying the dip, buying the rip is always much more profitable than trying to sell the dip, right? Selling, for the most part, is a sucker bet on a lot of these instruments. Now, having said this today, I'm going to eat my words probably. We're very likely, if Jerome comes in there and does his I'm never going to cut again, and fuck you all, and the interest rates are going to stay as is because we're afraid of inflation. We could set ourselves up for a nice, very nasty decline. And if we get a decline, it's obvious we're going to see it. We're going to be able to trade it. But generally, on a day-to-day basis, we want to be more positive bias than negative bias, right? Does that make sense? So a couple of setups that we're going to look at that are just money, just pure money. The first one is what I call the turn setup. So we're in negative trend, and we get 2 positive green labels in a row. The second one is almost always a winning trade. This particular setup, 2 after a big sell-off, almost always a great trade. Now, of course, this is all pre-news, so you couldn't have traded this, but you can see, boom, nice clean winner over here, right? The other thing that we're going to do is that a truly high probability setup is when you get a new trend where the 8, for example, crosses the 200 up and down, and we wait not for the first, but for the second signal that's in the direction of the big trend. So this, for example, crosses to the downside. We're not going to trade the first red label. We're going to trade the second one. And the reason why is because the first red label is almost always a test, and it's never a high probability setup. But the second red label establishes a trend, almost always a great way for us to go. So we're going to definitely do that. And then finally, the cool thing we're going to do is we're going to start using the opposite labels as kind of really interesting possibilities for entries into the trend-based conditions. So what I mean by that, and that's a mouthful, so I'm going to show it to you when we're trading. This is a negative trend structure, right? NASDAQ is negative trend. Instead of selling the red, we're actually going to sell the green. The reason why is because we're going to assume that this breakout is false in a downtrend, and we're going to get the best possible price, so we have the highest possibility of getting it resolved, right? And that is how we're going to try and trade this on a trade by trade basis. So I think Jerome is going to be ready soon. Let me see. I'm going to do something. You guys tell me. I want to try something. Just bear a second with me. Let's see if we can do this. I'm going to try and divide the screen into 2, and then hopefully you guys can hear it. Hang on a second. Let me see if we can do this. You guys can't hear the can't hear any music, right? Now I can't divide the screen by two because I have to. We'll just keep it like this. And I think on YouTube when he comes on, you're gonna have closing captions. So we're gonna be able to watch the captions, and we're just gonna have to watch the captions, and I'll just tell you if there was anything else. Thank you for saying that. Fred is saying Moran was the lone dissenter in favor of a 50 basis point cut, which means that everybody else, as I knew, they're all going to be very conventional. Look, the Fed is nothing if not conventional, right? The Fed is the most conventional thing in the world. They're always behind the A curve. They never anticipate. They always react. They are the quintessence of bureaucracy. So to expect anything original or creative out of them is a fool's errand. And I think he's probably going to come out and say, yeah, we think everything is fine. Retail sales are strong. We don't see, we see the economy slowing down, but we still think that our primary function is to combat inflation. I expect him to be hawkish. Now, he could always surprise me, but he rarely does. So if he's hawkish, we're going to see some negative moves down here. I think gold is actually going to, gold could test 3,700 if he's kind of hawkish. So, and NAS has also been under pressure. Now, remember, both of these guys have really rallied hard. 25 basis points has already been baked in forever. And if there's very little promise, now he may actually say, hey, I'm going to be good for another two before the end of the year. And if that's the case, then maybe the market will recover and rally. But we'll see. Okay, the same Powell is talking now. Okay, for some reason it's not coming up. Okay, let me see. Unemployment at a relatively low level. The reason why there's so little jobs is because there's a slowdown in the labor force the last 3 months. Downside risk to employment have risen. Inflation is still somewhat elevated, but much lower. Goods inflation is rising, but services inflation is falling. See, starting to get negative on gold. We're going to be watching gold here, guys. Tariffs are starting to push prices up. Um, Inflation could be more persistent due to tariffs, so that's a risk. So that is a cautiously hawkish point of view. Yeah, he's. I can't. Um, yeah, I'm gonna. Yeah, this is definitely a hawkish cut. That's right. And so, so they're looking for two more cuts at 25 basis points. So they're staying on a very conventional course of a quarter of a percentage point every month, for the next 3 months. And blah, 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 anchored expectations, everything. Gold is starting to slip. So we're going to be looking for short possibilities in gold. Um, once it gives us. All right, here come the questions. Let's see what the questions are. He's, he's asking about Myron's position at the White House yeah, Myron is both at the White House and the Fed. He's saying, are you independent? He doesn't have anything yet because he's telling him to go. He's asking, are tariffs impacting the labor market instead of instead of inflation? He says it's possible that tariffs are having an impact on labor markets rather than rather than. He says employment has to do with immigration much more than with tariffs. Uh, we're getting a all right. We're getting a signal in Nasdaq, a sell signal in Nasdaq, but we're not going to take this one. The reason we're not going to take this one is because it's the first. It's the first of the negative trend. It's also like a big volatility signal, so we actually have to lower our size to 1 instead of 2. We need like a 15 point target and a 45 point stop to kind of survive this move. Um, so we're going to stay patient, and we're not going to jump to this signal, but it's the first negative signal in negative trends. So the second signal, the second red signal, or the second orange signal in this case, um, will be the signal for us. It says after the revision of the labor data, it's really hard to argue that the risks are tilted towards inflation. That there's now equal risk of unemployment versus inflation. So that's actually a pretty dovish acknowledgement on his part. And he's asking, why didn't they do more than 25 basis points? Did they seriously entertain it? He says it's not necessary at all because policy is not out of place, that we don't need an emergency rate cut like the way they've been arguing. And no, it doesn't. It doesn't, Tony. It doesn't matter for the opposite, but generally there's always going to be an opposite signal in between. But what we're looking for is just some evidence of continuation of this downtrend. Right now, the market is um, she asked if this was kind of an insurance cut, and he said yes. He's basically saying it's kind of a risk management cut in a sense that um, they see the weakness in the labor force. They don't want it to get any worse, so they think that having a more dovish posture is better now because the risks of the risk between employment and inflation have become balanced versus clearly being in the favor of inflation. So instead of really fighting inflationary forces, they're now much more concerned about having a slow, soft landing, so they don't have a recessionary outcome. So the basic idea is, look, things are clearly slowed down, but they're not recessionary. We're not going 50 basis points. We're going to go slow and steady at 25, which is, not super dovish, but also not really super bearish. So it's hard to imagine a lot of movement, frankly, from the news today. We'll have to see. So let me see if there's anything else he's saying. So again, he keeps emphasizing the fact that inflationary risks have declined and employment risks have increased. He's sort of repeating the same thing to a small degree, not to a large degree, but to a small degree. So that's sort of quasi dovish, but maybe not dovish enough for the market, which has had such a huge run up. So we'll see if we could. I think we could be in a situation where we see a little bit of a sell off and then a buy up at the end of the day. We'll have to see. Let's see if there's anything else controversial that needs to be. He's saying that there's enough of a slowdown in demand that it warrants us to be equally vigilant about. He's saying every year since 2015 they've been saying they're going to hit target in 2 years. He's basically saying, yeah. We know that our projections never come true, but nevertheless we're going to make them. That's basically it. If you took this sell just off that signal, it actually worked with a big volatility wrapper around it. But I'm sort of trying to just trade the best possible setup. Price action is kind of very, very slow. Ironically enough, we don't have a lot of reactions so far, which happens a lot. Where the press conference kind of doesn't have a lot of price action as everybody's absorbing information, and then afterwards we get a big move. Let's see what Elizabeth is asking. Basically, he's repeating the exact same thing 1,000 times over. Look, we're seeing inflation still a problem, but employment now becomes a problem. So we're going to be equally vigilant in trying to to combat both. I'm actually curious. Let's just see what the other indices are doing. Gold, S&P. Let's see if there's any signals in the S&P. No. And Dow. Dow has actually just turned negative bid. Dow is the only one that was positive bid. S&P is still positive. Dow S&P also just turned negative bid. Okay, so that's basically it. We're kind of just sitting there waiting, twiddling our thumbs. We don't have a signal in gold, Kevin. So that's good. That's good. I'm glad you took the hit on YM. So here's where it gets interesting, right? And here's where we can play around with our new structure. We are possibly getting a green Christmas tree label, like some kind of bouncing off the bottom, but that's against the negative trend. It's a retrace trade, right? It's a trade where we would ideally want to be short this move to get the best possible price before it comes back down. But from here to there, it's going to be a long time because we still have like 2 minutes for this candle to fill, and then the other candle to fill to actually create this structure. May not even be able to see it, but I'm kind of watching this because it's the beginning of a development of the Christmas tree structure, and if it comes up over here as a signal, then we'll be able to take it as a possible signal right now. But so far, not much going on. Yes, we're just waiting for the opportunity. A lot of times, the presser doesn't have a lot of movement. Just there in a meeting by meeting situation. They're on a preset path, and they're going to look at it on a data point basis. He says their projection is just probabilities. They don't stick by their projections. So he's probably going to finish up in a couple of 10 minutes, and we should be able to get price action reaction after that, because usually that's when we get the good price action reaction. Oh, we're getting a second sell signal in NAS, right? So let's focus on this. We're going to trade that with a 10-point target and a 30-point stop. Buck 23 on the clock here. And actually, no, we're going to do this with a larger stop and a target. We're going to do this with a 1. So it's going to be 60, 180. This is a wide volatility stop and a target. Oh, wait, no, I don't want to. Okay, 29 seconds left here. And it's going to be a 15-point target, 45-point stop. This is a really, really big volatility candle to the downside. Starting to press to the downside. Waiting for the candle to close to get ourselves the final price. Right, sure. Target is going to be 234. Stop is at 294. He's saying they're not political. They don't do politics. Blah blah blah. So on and so forth. So we are at two. We're looking for 234 as our target. A lot of volatility and a lot of volatility on the move. They asked him about, you see, court case about Lisa Cook. He says, I see it as a court case on which I don't want to comment. So this is the thing about Fed you got to be mindful of is you can see this is a big stop, big target, and we're probably going to get stopped out because we're just not big enough on the volatility. Like this is a huge candle, and I want to move the stop because I'm going to take myself out of it, mainly because there's just a huge amount of volatility going on in the marketplace, and it didn't have enough continuity, and that's that happens. Sometimes the second sell doesn't work. This was one of those cases. Obviously, off the news, you're not going to get always the play, but we're going to stick to our stops and targets and basically follow good procedures. Mainly because it's very, very easy to play Monday morning quarterback and say, oh, if I just give myself a little bit of wider stop, I could have had it more. This is about as wide a stop as I want to give in this particular structure, and we'll take it from there. We'll take the next signal. We had small size on this. The next signal we'll get a little bit bigger size and see if we can get a true reversal. So no, in this case, the first signal worked, but the second signal didn't, which happens actually a lot against news-driven stuff where you don't necessarily have continuity because it's always going to be it's whatever he's saying the next minute that very often changes the flow, right? Let me see if I think I'm going to move him down a little bit here to here. I'm going to put this over here so we can have bigger size, bigger screen. Gold actually is just showing nothing. Gold is really, really tight here. Let's see what the other indices are doing. NASDAQ is popping. And the Dow. Dow is also popping. Not much going on here. So now we're kind of, trying to see, hey, are we making a V-shaped recovery here? We're going to do one more attempt at a short trade if I get a big green label here. And again, the green label is probably going to be large volatility. So it's going to be like a 15 target, 45 stop against it because the volatility here is really, really big. But let's see if we get the candle. So the danger, and fully aware that this could be the danger trade, is that we get nothing but a V-shaped recovery. Like this is going to go just like this, and we're dead. We're assuming that's not going to happen. We're assuming that basically the likely trade that's going to happen is this up and then come back down. We're assuming that this retrace trade is going to come back down for us, but we'll have to see if that's going to be the case. FOMC is always super volatile on the trades. So we've got a minute 14. This thing is trading wide, 46 to 79. Really, God, man, these are big moves, big moves. But we're going to sell this label because this is a downtrend, rally in a downtrend. We're going to try to sell this rip, try to see if we can get a really, really good entry price on the move here. We'll see. All right, 18, 19, big rally on the move here. 15. All right, I'm going to try and short. I'm going to get short a little bit early. And again, so the target here is going to be 74 against a 34 stop. Let's see if this retrace trade works to the downside, just as I sketched it out on the chart here. Maybe not. Nope. It really feels like the market is sort of pretty content with what he's saying. He's not really as bearish as everybody thought or as hawkish as everybody thought he was. And prices continue to kind of hold. We're in position. We're going to hold this trade and see if it works or not. It's obviously really, really stretching us to the upside. But we need to see. Maybe it's going to come back down a little bit, and I get that 74 target. Maybe not. A lot of volatility. Jesus Christ. It's really moving around. No, I don't know. It's going to be a runaway market. It's a V-shaped move. Tease me, but neither one of these trades worked today. Neither one of the setups worked today. Kind of unfortunate. Yeah. Wow. Okay. Nothing I can do. The setup didn't work the other way. Didn't work this way. We're kind of recovering. Let's see if there's anything going on in gold. Gold is doing nothing. And it looks like if I were to bet, I bet NASDAQ and everybody, S&P and everybody else is doing the same thing, which is that they're making a V-shaped recovery. Tough trading today because he really did not come out as, I guess, hawkish as everybody thought he was. So there was no continuity. The market just sort of dropped off and came back. But we still got an hour to go. And we still got lots of interesting other setups to explore. So we'll take a look and see what else we can do here. For right now, we got no setups. Big choppy wave move, man. Wow. All right, still talking about goods inflation and stuff like that. Let me get rid of the execution marks so that we can look at the chart cleanly and see what happens next. Gold is also recovering. I mean, everything is sort of recovering strongly. Be interesting to see if we go positive trend on everything. Yeah, there's no clear direction. It's really, we sort of had chop, lots of volatility, and come right back down. I would not go long now. There's no signal to go long. Gold might be a possible long if we get a buy label here on a kind of a turn move, but there's nothing really, there's really no signals here for us to get long. We ran into, today was kind of a tough day because we basically ran into a buzzsaw. The sells stopped dead, and then they made a V. And I told you that the risk of that trade was a V-shaped recovery. It's exactly what happened. And that's, that happens sometimes. You have to know exactly where the weakness of the setup is. The weakness on the retrace setup is always a V-shaped recovery. It's not common, though. It's not often that you get that. But today happens to be one of those V-shaped moves. So, we are... Just stuck watching it. The green dots are just there to tell you there's positive momentum. The signals are the labels, right? So there's no signal. The label is the signal. The green dots just tell you positive or negative momentum on the chart. You can use them as a signal, but that'd be your own interpretation of it. Yeah, gold is definitely kind of a tepid recovery here. But NASDAQ, it looks like it wants to go positive bid here at this point. So we have to see this. We might take a punt on this gold since there's nothing else on the charts that's kind of legitimate, and see if you get any kind of a upside move on this trade here. We can do it in our well charts accounts because we like to trade gold in our well charts accounts. So maybe we'll take a punt on it there, but we need to really have the green dot hold. All right, we're long gold 98, and the target is 700. We're almost there, actually. Really, really big pop, right? Almost there. 98 almost came up to the trade. Let's see if we can get that moving over here. So much volatility. Look at gold popping. Wow. Yeah, not coming in. All right, we're going to have to be very patient with the gold trade. See if we can rally into the move here. All right, you know what? I'm going to flatten out a little, take as much profit as I could, but about $1.50 instead of our usual 2 profit. And I'll tell you why I did this. First of all, there's a lot of volatility, so you can see it's just really rocking around. Secondly, when you have a couple of losers, it's really important to take a winner, not because it's a winner, but just to give yourself that positive vibe, so that you can then reset your mind, start looking at good trades. This was a mildly good trade. It gave us the profit. We'll take it. We took a little bit of the gold profit. Fine. I'm not going to complain about it. NASDAQ is starting to turn back to positive, so now we can see if we can work that trade and see if it plays itself out. And you see it pretty much was all she wrote, just coming right back down. It may consolidate. If we get what's interesting is actually if gold comes down, it gives us a second buy signal. That's going to be a pretty good place to get long. But for now, we take what we can get. You can't always have the perfect trade. All right, NASDAQ crosses over into positive territory. We can take a look at S&P too. We can trade, see if there's any signals in the S&P or the Dow as well. Let's see if the Dow has any. Dow was. Now they all pretty much look the same. They kind of all rallying. to the 200 period SMA, and then just not doing much. See if he has anything else to say. Oh, good job. Nice job, SLB. I'm glad you had a clean day. Very, very nice. I don't have any signal, Wally. The dot is not a signal. The label is a signal. The dot is just a sort of a show to you that there's possibility. Um, I know you guys want to. Very often it does not pay to kind of triple guess the losses. These were not bad losses. These were just losses that you knew were a possibility because of the volatility of the market. Right? We had sort of a very choppy market that died, and then a V-shaped recovery. Whenever you get that, if you're trading any kind of a retrace setup, you're always going to get hurt that way. Right? It's just the nature of the beast. Um, and now we sort of really slowed down. We got 50. We got about half an hour to 45 minutes of price action. Let's see what they want to show us. So he says they would love to see upside growth to the labor market as they trade. So I'm getting a sell signal on the Dow, which is like not the second but the first sell signal. But we might take a punt on this just because um, this is Fed day, so the classic patterns that we want to trade may just not be there. We just got to take whatever we can get. So I'm waiting to see if this thing still stays negative sell. We'll give it a shot. Honestly, guys, it's really hard to tell because the market is clearly sort of not showing its full hand, but it looks much more bid than it does sell. This sell-off kind of held. We'll have to see. We'll have to see if I get any signals, but Nasdaq is kind of holding bid over here. Really feels like it wants to go higher. Wonder what the S&P is doing. See, they're all on the cusp, right? Moving average is kind of breaking up. I wouldn't be surprised if, like, in the next half hour, they decided to really lift this and just take it to the upside. I'm going to punt on this trade. It's not even a setup yet. I need a white dot, green dot for it to become a buy, but I'm going to anticipate this a little bit because honestly, we have no setups and it's kind of boring. I don't want to, I want to show you a little bit of fun. Although I promised I was only going to take good trades, but this is not a bad trade. It's with trend. I'm going to give it a shot here in with a 1030 over here in this particular setup. Let's see if I'm going to pay for my sins over here for doing this. 10, 11, 9, 6, 7, 5, 4, 3, 2, 1. All right, we're going to go long here. So 97 is the target for this trade. Let's see if we can hit 97 on this move. And we're done. And that turns it into a green label, which is like the next trade. So I sort of anticipated this move of the green label. If it happens, it happens. If it didn't, I knew that there was going to be an interesting clean scalp to the upside for the momentum. So just trying to get a little bit of this back, make our life a little more interesting. Anybody take that scalp with me? We're so quiet with so little price action that I figure, let's anticipate our patterns at this point, since we don't have much really going on over here. Okay, we're really I was asking about consumer finances, like nothing really interesting. Gold, I know some people think that gold may be a buy, and it is. It's an interesting idea where you buy the dip here. You could have bought the red. It certainly worked. If you bought the 83s, it definitely worked for you. But if the gold really begins to rally, we wouldn't have to have two green labels, and that would be a really good setup for us for continuity. But for now, not much. I mean, I can't believe how tight we are, but we are really tight. We went from having a movement, and now the market just died. It's like Asia session trade. I do think, though, if we kind of break out over here, let's take a look at NASDAQ. So this is all, right now, if you look at NASDAQ, this is all pre-event price action. This was the spike before, right? And basically that this 520, 523 level is where we kind of break out. So if we get a green label here, it's going to be worth a shot for us to trade it. So we're actually getting a, hold on, let me just make sure I get this right. This should be under NQ range. Yeah, okay. That's correct. Okay. So if I get this orange label on Christmas, we're going to have to go to a 1545 target if I can get another, a label coming up here. But nothing's showing up. Still watching. This is the key level for us now. I mean, the market has kind of absorbed everything he's got to say. Do we want to come back and rally it on the assumption that, hey, we know, like he pretty confidently gave the market another 50 basis worth of cuts to the end of the year. So if you think about it from a longer point of view, it's not a bad trade. It's not a bad assumption to get longer here. And you see, the price action really kind of converted to a more long posture at this point. Oh, you were trading long on the gold's turning around? Yeah, good for you. He should be wrapping up soon. And then it leaves us to the last half hour. Now, what's cool about trading FOMC with me today is we actually get to trade the 3 o'clock trade, the market close trade, which is on a regular day a really, really good trade. He's already done. Oh, am I watching this on is he done? Yeah, okay, he's done. Okay, so what's cool about this? Let's go to full screen here. Is if I get a buy label, this is our classic 3 o'clock market trade. The first directional label after 3 o'clock in a direction of the bigger trend, which is the uptrend. So far, I don't have the label. We haven't broken up. But if this breaks to the upside, I absolutely want to trade this, both as a signal and as a see, like right now. If this holds, we want to get behind it. Let's even get a market on close trade here. Okay, $1.05 on the clock. We'll see if this holds as a buy signal. I gotta go. It's going into high volatility trade. So I'm going to take a high volatility move on this. 33, 34 seconds. $27 seconds. So you see how the market is warning us that this is a big volatility breakout candle. So if we really want to play this game, we got to give ourselves room enough to play. All right, long. I'm long here. 529 is my target. 469 is my stop. Let's see. Let's see if we can get the move. And we're almost there. Almost there. Almost there. 529. Come on. And we're done. And that trade, the end of day trade, is something we're going to be doing all the time in the next couple of weeks as the pure money trade, right? So I'm sorry we had the press conference chop. I guess, in some ways, I always forget this. Probably the key thing with FOMC presser is we're all eager to trade, but really the best trades are after he shuts the fuck up, right? Because during his conversation, you get very contrary flows. So once he stopped talking, all the trades started to really work much better. But more importantly, this is a kind of a money trade that I love to take. It's the first Christmas tree signal in direction of the trend after 3 o'clock. That is like a 9 out of 10 trade, right? all the money is made after Jerome shuts the fuck up, right? That's really, really true. But that's the more important part. I wanted to show you, that little setup is great. There's a lot of you guys in the room. Let's do this. Let's do this. A lot of people in the room. I want to ask you a question. We're going to do a poll because we got a few minutes to hang out. Let's do a poll. What do you prefer? What do you prefer? Make many trades per day, make one or two. I'm actually really curious because this is sort of like the one shot, one kill trade setup that I absolutely love for people who don't have a lot of time or don't really want to spend a lot of screen time. This requires like an hour a day of trading, and it really works super well. So I'm just curious. Everybody vote in the poll. Let me know. I think the audience, given the fact that half the audience is degenerate like me, loves to trade a lot, but I also think there's like a whole bunch of you guys that don't necessarily want to be looking at the screen over and over again, making 30, 40 trades a day, and would love to come in 3 o'clock, boom, 10 o'clock, boom, go play golf, go do whatever you want to do. So I'm just curious. Maybe I'm wrong, but we'll see. So far we're pretty split even on the trades. Claudia says you think that wealth charts made changes. I don't think they've updated my indicator yet, but it'd be nice if they did. Let me see if I can delete. Hang on. Let me just hold on. If I go back here. How do you delete indicator? What am I doing? Chart templates, remove all technical analysis. Yes, I'm sure. Okay. Now I want to add indicator. Add indicators for Schlossberg, dots only. No, I don't think they've updated my indicator just yet. I'm going to speak to Rob a little bit later today and see if it does. So if you trade like I do, let's say 10 NASDAQ points, that's $200 on an E-mini contract in one trade. That's what makes it such a cool approach. if you want to do this. Even if you trade 5 micros and you do one in the morning, one at night, and you hit both, that's $100 in the morning, $100 at night, just one trade on each thing, and you're done. It's really, I think it's kind of a cool setup, for what we need to do. Where's gold? So gold is interesting because I want to see if gold can give me a second green label, right? This is the first green label. This is the second green label, recovery label. That's probably going to be an interesting trade. See if we can get a move in gold. I will show you this though, guys, in terms of like gold's ability to for like multi accuracy trades. I did a lot of these trades earlier today. Imagine you are gold is positive bid in this case, right? Imagine you're buying every red label. So I'm going to go through this with you one by one. And you talk about this is a winner, this is a winner, this is a winner. So 3-0, 4-0, right? 4-0. I think this one 720. This is 4-1, right? And here, you obviously it's before the event. I would probably stop. But this is just the North American session, right? What if you did? And this is where this really shines. Remember that in Asia, the ranges are so much smaller that you almost can give yourself, like, look at the range in Asia. You were just a pure gold buy because you're just a gold bull. And every dip you buy, as long as the dip is preceded by a green Christmas tree table, you're buying it. So you can do 1 winner, 2 winner. This is just for like $1.03. 3, 4, lose on this one, 4-1, right? Then you come back over here, 5-1. Then you come back over here. This one actually worked for $1 because you came in at 13. This came out at 15, 6-1, right? You came in over here, 7-1. This one, 8-1. This is just from midnight to 4 o'clock. You're now 8-1 on your trades. So you're net positive 5. You're going to go again over here, 9-1. Even over here, 10-1. Actually, when I was up at 4, this trade was a winner. This was a winner. This one, you can actually see this one being a. This one I actually did I sell this one? No, I bought this one. Yeah, I bought it. I sold it. This one was a winner too. You can actually see it. So that's 10-1, 11-1. You're like basically 11-1 trades from midnight until 7 o'clock in the morning. So if you're trading anywhere between in Asia where the ranges are smaller, so you could absolutely survive the retraces, you could clip so much money. It was just it really was a pretty easy trade, all morning long, in gold. Pretty even on the poll, guys, 48 to 52. So people still want to scalp, and but half the people definitely want to do one trade a day, which is why I think it's going to be really great when we're going to do this. I'm going to do this with you guys. We're going to come in at 3 o'clock and just trade one trade a day on the close. Super efficient. Well, the thing about this is, Tony, is obviously if you're doing 1 or 2 trades a day, you can do larger size. The more trades you do, the smaller size you have to trade. That's the trade-off of the markets. If you don't appreciate that truth, you're always going to get in trouble. You can't do 100 trades at the same size as you do 1 or 2, because if you could, then you'd just be, you'd be a billionaire overnight. You have to do small sizes. Yes, we're gonna do Asia tonight, 7:45 tonight. See if we can get gold trading, maybe a little bit of NASDAQ trading as far as goes. Gold is actually setting up for a possible second green label here. So I'm gonna just give ourselves one last shot here. See if we can get the gold trade in play. It's trying to recover the 3,700 level. See if we can get a signal on gold, make it a play. Back to the 700 level, right? Making a nice clean double bottom. I'm going to go to our wealth charts account, see if we can make that a play. No marathon this week because the FOMC kind of took the marathon in play. The FOMC was kind of like it's like the Boston. No, I shouldn't rag on the Boston Marathon. You know, the FOMC was like the Boston Marathon versus the New York Marathon of marathon trading. You know, I should not rag on that. All right, we got a minute to go, and it's actually playing peaking signal for us. Let's see if it's going to give us a signal. $43.42 seconds on the chart. No signal, guys. No signal, unfortunately. Not quite there yet. I think we're going to wrap it up. We took the one trade that I really wanted to show you, which was like the reason why I kind of really like the FOMC trade, even though, you know, obviously it was kind of a dud while he was talking, was the 3 o'clock trade. I hope you guys really like that, because that trade, if you study it, is such a great trade as a single setup trade. You can do just one Apex account whose only function is to trade the 10 o'clock trade and the 3 o'clock trade, and you will steer yourself right for the most part. You know, it may just take you longer because obviously you're only doing like one trade a day, but you'll steal yourself right in terms of structure. Okay, I'll be back in a couple of hours for the Asia Marathon trade. I'll post the event right afterwards. Thanks for hanging out with me. I mean, FOMC, you know, FOMC is FOMC. It was, you know, fun to trade it. I think the big takeaway, frankly, is that he's going to give us another 50 base worth of cuts. The more interesting part is is the economy going to continue to grow? That's really the big thing. If the economy continues to grow, the market really starts to rally. If we start to slow down, I think so much of the positive news is factored in. We could be looking for a longer term reversal, but we'll see. We'll see how it plays out. Any final questions? Anything else on your mind, guys? I'll give it a minute or two. I'll end the poll. Thank you for everybody trading in the poll. It was a basically 50-50 poll, which is good. Great, guys. Thank you so much. Thanks for hanging out with us. Don't forget Kathy's Masterclass. I put it up there. Let me just do one more time. If you want her Masterclass, it's right there. It's in the link. Please give it a shot. Thank you, everybody. Have a wonderful day. I'll see you guys a little bit later. Take care.